Hey guys, it's Nick. I don't really follow crypto and I don't follow sports at all. Even so, I know the Super Bowl is coming up and I can't help but see all these articles about how much crypto companies are going to spend on Super Bowl ads and what that represents for crypto. Spending all this money during the Super Bowl is supposed to mean that crypto is now legit and mainstream, and that everyday people will be investing in it. Seeing this hype reminds me of the last time this kind of hype around Super Bowl ads happened back in 2000 with all the new .com companies. So let's have a look at what happened back then and see how much it compares to today. You might even be surprised to see one of the .com companies advertising back then is now a big name in crypto today. Now, Mark Twain said, history doesn't repeat, but it rhymes. Well, this looks like 2022 is rhyming with 2000, right down to the big drop in the stock market in January. The NASDAQ started off the first week of 2000 with a 16% drop. With the Super Bowl only a few weeks away on January 30th, all the .com ads were already paid for and ready to go. So here's a look at the first week of 2000 in the NASDAQ 100, the QQQ. It started off around 96, went as low as around 79, 75, and bounced around until here, the Super Bowl week. So it recovered after that up to about 120, and within about 2 years, it bottomed out down around 20, losing about 84% from its peak. And so we have a very similar situation here in the first week of 2022. NASDAQ started falling and it fell as low as about 16% from where it opened, compared to about 17% as low as NASDAQ went in 2000 before the Super Bowl. Now you see these articles saying crypto goes mainstream as exchanges buy Super Bowl ads, and they're paying up to $7 million for 30-second ads. And here's another one, and it says, obviously the goal of the big crypto companies is to get closer to mass adoption. Crypto.com and FTX to shell out millions for Super Bowl ads. Cryptocurrency exchanges are officially aiming for the mainstream. There's a lot of people saying crypto is a fad just the way they said the internet was a fad. Crypto is really the basis of the next version of the internet. Well, if that's the case, then maybe this is the next version of the internet bubble. So here back in 2000, they say .com's ready bowl game. Internet companies risk everything on pricey one-shot Super Bowl ads. And back then, these ads were about $2 million for 30 seconds. And so the year before, in 1999, only 2 internet companies advertised during the Super Bowl, Monster.com and HotJobs.com. But in 2000, a dozen others have now decided to risk everything on this year's Super Bowl. Together, they represent roughly 40% of all the bowl advertisers. And the average 30-second spot during the game is 2.2 million. So here, this Fast Company article, they talk about it. They say brands were taking millions of dollars, putting it in a pile, dousing it with gasoline, and paying for the opportunity to toss a match on it in front of 100 million people. The first major brands born online were getting their first taste of mainstream marketing's highest peak. This was the future. The internet had arrived. Business would be transformed forever. Sadly, though, for many of these companies, the realities of basic traditional accounting still stood firm. The .com Super Bowl was the high water mark for this first wave of web-based companies, most of which wouldn't exist within just a few years or sooner. Now, most people know that Pets.com was like the poster boy for the top of the internet bubble with their sock puppet mascot. And they spent $2 million on their first and only Super Bowl before they went public the next month at $11. And by November of the same year in 2000, the stock was 19 cents, and they laid off most of their staff and stopped taking orders. Here is what $2 million of other people's money got them in the 2000 Super Bowl.
Okay, Dino, I gotta go to a lot of stores to get what you like. I'll be back. If you leave me now, you'll take away the biggest part of me. Ooh, no, baby.
yardstick, I think I'm in a boot.
So what happened to Pets.com? Well, Pets.com lacked a workable business plan and lost money on nearly every sale because even before the cost of advertising, it was selling merchandise for approximately 1/3 the price it paid to obtain the products. I guess the plan was to make it up on volume, huh? So Pets.com tried to build a customer base by offering discounts and free shipping, but it was impossible to turn a profit while absorbing the cost of shipping for heavy bags of cat litter and cans of pet food within a business whose conventional profit margins are only like 2 to 4%. So fortunately, you don't have problems like cost of merchandise or shipping expense with cryptocurrencies. Just copy and paste infinite wealth. So many .coms thought that the internet bubble would just go on forever, so that they just wasted $2 million like it was nothing to them. And ETrade spent $2 million on a 30-second ad about nothing and actually bragged about what a waste of money it was.
It's time for ETrade, the #1 place to invest online.
And even MicroStrategy spent $2 million on an ad. And if you don't know, MicroStrategy is a company that sells bonds to buy Bitcoin, along with some other kind of much less important software business, I guess.
Hello, Kathy. Start alert.
MicroStrategy software is creating a new generation of one-to-one e-business.
Fintech merger announced.
Where's that idiot stockbroker? No, I don't want his voicemail.
40%.
E-business solutions through web, wireless, and voice.
Oh, nothing. Just another merger.
MicroStrategy, the power of intelligent e-business.
So yeah, MicroStrategy was a very hot stock back then. And let's see how well you would have done if you bought it around the time of this ad. If you're pissed now because you bought it somewhere around the recent high of $1,200, let's have a look at what it was back then. So here's MicroStrategy made a high around $1,300 in February of 2021, and now it's sitting around $400. So not very good, right? Well, let's see what it was like in 2000 around the Super Bowl time. So around the Super Bowl in 2000, it was around $1,500, and not too long after that, it peaked around $3,330. And by, I don't know, May, it was $180 or so. And if you waited for it to come back, well, that's a pretty long wait because it actually never came back. And it's been bouncing around this level of like $100 or $200 or so until about 2020 when it ran up to like $1,200. So is this a repeat of the euphoria at the top of the .com bubble? And are we going to see a pop in the stock market bubble as well as the crypto market? There were a whole lot of .com companies around back then that are no longer around now or even just a few years after that Super Bowl commercial. There are now over 17,000 cryptocurrencies and over 450 exchanges. Let's think about that for a second. There's only about 200 countries in the world, so that means that there are about 85 unique cryptocurrencies for each country in the world, and about 8 times more exchanges than all the stock exchanges in the world. How many of these will survive until next year's Super Bowl? During the 2000 Super Bowl, 17 .com companies paid about $44 million for ad spots. At the 2001 Super Bowl, only 3 .com companies ran ads during the game. The NASDAQ ended up losing about 39% in 2000. And in the Super Bowl of 2001, ETrade's ad this time wasn't as smug, as it surveyed the landscape of the dot-coms that crashed and burned in the last year. So guys, do you think we are in a similar situation as we were in 2000? Let me know what you think in the comments below. Thanks for watching, guys, and I'll see you in the next one.